Good weekend. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Halloween, October 31st, 2023. And the time right now, 6:40 p.m. Central Time. We had a snowstorm in Chicago. Hard to believe. We got snow on the ground, the whole thing. I remember as a kid, we used to get a lot of snow at this time of year. We don't get it the way that we used to. Climate warming, you know what that's about. All right, so tomorrow's a big day. We today got part of the numbers. The U.S. Treasury told us that they need another $776 billion to fund to finish out this quarter, then just in the low $800 billion range for next quarter. But they didn't tell us how they're going to go about it. We'll get the instruments at about 7:30 in the morning. The market will look at that and you'll get a reaction. Then the reaction at 1 o'clock will be the FOMC meeting where we get the monetary policy. I can already tell you what it is in case you want to meet it. The Fed will stand still, and Fed Chair Powell will be hawkish. Labor, we're watching costs of labor. We're watching how strong the labor is. We're going to get JOLTS data, ADP data, the jobs report this week. We have another report from the Bank of England. And we saw the Bank of Japan come out, and the yen got smashed today. This is a bounce. It was down like 120 points. And the reason is, they took away their yield control. So what they were doing is they were saying, okay, we're going to allow the 10-year bond to do this, or their note to do this, their 5-year to do this. They put in controls as to how far within the bands they can go. They're removing them. But they didn't step to the table to support the yen. So it's still basically an easy money policy on the surface today. But if the market sees that the yields go up, that'll start slowing the economy down. I found it very confusing. And I'm not convinced the market didn't either, because they punished the yen and they did it very hard. Another thing we have to watch for. You are at a point in time now where how many times are we going to keep discounting the Israeli-Gaza war in the financial markets? We know the human toll. Come on, I don't just wipe through that. But this is all about finance in this video. This isn't what's right, what's wrong, which side should do that, how do you get beyond this point. That's not what it's about. It is about that the war's going on. We see the atrocities, both sides. We see the human death toll, and the markets have absorbed it, believe it or not. You're not at $90 crude anymore. You're at $81 in the WTI. Gold is not over 2,000. It's not even back to 2025. It is sold off again from there. The copper market's not falling apart, but it's not rallying either. It needs China, which is doing an awful lot to absorb debt now from the regions and take it into the mainstream. That they are doing. The dollar had a good rally today, and it weighed on the gold market. And tomorrow we're going to get the reaction to a number of things through the rest of the week. So when I look at the chart action, I can see that we're getting a bounce, all right? We are up for the week so far, 1.5%. And I warn you, the month of November is one of the strongest months of the year in the stock indices. So yes, the markets are still bearish, but they're flirting with losing some of that. When you take a look at the chart here, here's the complete bar. You can see how you came down and you're getting your bounce. So we've had 3 big months in a row of down. The trend is down. And all of a sudden, you're starting to get markets that are rallying and closing at the upper part of their ranges. That sets up new window envelopes. You had a bearish crossover of the 18-day average in red about 5 days ago under the 200. You went down major lower low. You're not going anywhere. Should the market rally off this week's economic data, these are your resistance points. Where's the support? You've hit it a couple of times, and now you're going to the right-hand side of it. And be careful. When you take a look at the slow stochastic reading here, you know what embedded is if you've taken my enhanced Bollinger Band course. And if you haven't done that, I please ask you to go to our website, iraepstein.com, under the word education, and look at the different courses. But both numbers were under 20 here on Friday. They were that way yesterday. Today was the day they had to do that on the close to embed. Otherwise, you have an oversold market. Often they correct by getting a rally. And watch the action. That's what you did today. Now the reading's back to 21. So you're not embedding in any manner. So I'm not getting a market that's locking in on all that bearishness here. In the NASDAQ, it's the same type of event, so you can get more of a bounce. It's the same type of event in the Dow. The Russell isn't. This is the one that I've said where the pros are being short, and they are. And you can see how the market has got the embedded reading. Lose that, and I think you want to be out of your short position. Keep it, you look for the Bollinger Band bottom to get out of some of it. Then we're just drifting in an oversold market in the 10-year note, void of a trend. You have a higher high, a lower low. We had another bear market rally where the swing line did turn up originally, ran right into the buzzsaw of that line in the sand, the 18-day average, and ran out of steam. Same thing happened in the 5-year note. You can see today you had an outside day to the downside, and now you're following through back down. In the dollar, I have had this in a sideways action for a long time, and I've mentioned it night after night here. I've said, in fact, it's hard to play some of these currencies because of it. I don't think I've been wrong at all. I've been on the money. You went to the upper Bollinger Band, hit it a few times, fell in the lower band, went back to the upper band, and now you're sort of stuck right here. Maybe tomorrow we come out of all this with something that we learned from the Treasury refunding, along with what our Federal Reserve does and says. I don't know, but that's why you get these reports. It's this flip-flop of that in the euro, back and forth with the resistance. So we'll see what happens there. Then we get the British pound, and we'll know on Thursday what their bank is going to do. So I really think the currencies are not the place to be for the moment. I think you want to wait, get all this information, and get the reaction to it, and then decide is the market got a trend for you. You're embedding in Bitcoin. It tells me the break should be bought in the market until the red line closes back under 79. I'm looking for even higher prices, 37,000, a very real target in that market. When we get to the Brent versus WTI, it seems to have found a home. It's comfortable in the $4.50 range difference. And you could see here is the real impact of price. I just, in tonight's report, remember I do my written report if you get my full research, I talk about the U.S. hitting record production in the month of August, barrels per day, hard to believe, without a lot of new wells, by the way. This is because fracking has gotten way better. The technology picked up, you get a lot more per well, and that's what's going on. But you have more supply, and that's impacting, as you can see, price. You are getting oversold, but there's nothing bullish there. So people that thought, oh, this war is going to send it flying to 100, it didn't. And it's not going to unless the oil is shut off in some manner. In the heating oil, down. I'm starting to get more bearish than bullish in the heating oil. It's often down at this time of the year, but it's too oversold to attract me to tell my clients go short when you're in an oversold market. Natural gas just whipping up and down, void of a trend. It just can't seem to figure out which way it wants to go, up or down. So you put it together, you come up with game plans, and I know a lot of you like to follow my indicators. Well, if you use TradingView, I don't know if you know it, we built a suite for it. A number of you have now taken that suite. We put it out there. Here's how you get it. You go to our website, and under the client area, you hit client resources. You'll see the pull down menu. You sign up there for it. Once you've signed up, you'll get an email. You've signed up, we'll get one the next business day. Or if it's in the morning, we'll do it that business day. We turn it on. We send you the instruction, boom, you turn it on, and they're all there. All the studies I have, my window envelope, my swing line, the way that I do slow stochastics. You're only going to use up 2 pairs with this, so it works out pretty cool. And this ties in with all the courses that I have. So if you've taken my courses and used TradingView, you're going, well, I'd love to have his stuff. That's it. It takes up 2 slots. That's all it's going to take up. How do you get it and find out more? It's explained on our site, iraepstein.com, or you can click up here. You'll see an icon. It'll take you there. Client resources. Go in there, sign up. I think you'll enjoy it. So far, people that have done it, they're staying with it, so they obviously like it. I'm Ira. You have a good day. I'll see you tomorrow morning.